Hey guys, welcome back to Reserved Investments on YouTube. And today we're just going to have a short discussion on the differences between investing in collectibles and investing in financial assets over the short term and the long term. Now we're going to focus on one key difference as to how these markets operate. But first, I do have to put my glasses on because a lot of you tell me that I look more intelligent when I wear the glasses as opposed to contact lenses. So I kind of have to hold up to that image because I do want people to watch my videos and take me a little bit more seriously than just the other Timmy that is shooting YouTube videos in his basement office, claiming that all these markets in the antiques and collectibles trade go up exponentially. I mean, I am a step above the average Timmy. I just want you to know that. In fact, that should be my tagline. A step above the average Timmy Poindexter Jr. out there commenting on these markets. So today, we're going to take a deep dive, or a not so deep dive for those of you that are not educated in finance, into the markets for investing in collectibles versus that of investing in financial assets. The one key difference that I want to focus on is how both these markets operate in the short term versus the long term. Now, markets in the collectibles trade, even the antiques trade, are very predictable over the short term. Let me say that again. Markets in the antiques and collectibles trade over the short term are extremely predictable. Now, why is that? I'm going to give you examples. Well, let's say that you come to me and you go, Sean, you know what? I want to build a portfolio of rare coins. I can say, okay, tell me what you know about rare coins, and I can give you some advice in the market, and we can go from there, and we can work out a plan for you to invest in rare coins. How long do you want to hold these coins? And you come to me and you go, well, I'm thinking of holding these assets for anywhere from 5, 10, 15, 20 years. Okay, I can work with that. The market for rare coins, for antiques, for certain antiquities, for other markets that are established and mature in the antiques and collectibles trade is relatively predictable in the short term. The same thing is true for collectibles. There's a lot of people that watch my commentary on YouTube, and they reach out to me and they go, Sean, you don't know what you're talking about. I put all my money in Pokemon cards, Magic the Gathering cards, cryptocurrency, and I am doing phenomenal these last few years. And my one comeback to them is, yes, little Timmy, over a short-term time horizon, all these alternate asset markets, especially in the antiques and collectibles trade, are extremely predictable. If you want proof, we're going to get in my DeLorean time machine, and we're going to go back to the year 1996. Now, why are we going back to the year 1996? Well, if you watched any of my other videos, you know in 1996, Beanie Babies were all the latest thing. And eBay, under the guise of Auction Web, had just hit the scene in 1995. Well, that caused a catalyst in that market where everybody was speculating on, collecting, and investing in Beanie Babies to the point where there was a massive speculative bubble in this market back in 1996. So if I take anybody watching this video back to 1996 and I give you each $100 and I say, hey, your goal, we're going to start small here, I'm going to give you each $100, your goal over the next 3 years from 1996 to 1999 is to turn that $100 into $500 or $1,000 simply by investing in Beanie Babies. I guarantee you 95% of you, by and large, could do it because the market was predictable for that particular collectible back then until that market changed. Now, when did that market change? Well, I can tell you firsthand, 2020 hindsight again is the key here. If we look back to the Beanie Baby speculative bubble, the market really didn't start to fall apart until 2001, 2002. So Beanie Baby collectors in 1996, 1997, even 1998, 1999 that were arguing this is going to be the next big thing in the trade, they were right for several years at least. Then the bottom falled out, and now we consider those people to be idiots because a lot of them were stuck with a lot of inventory that they themselves cannot move or sell. So that's the problem with investing in an item like that. Now, where am I going with this? That is a prime example as to how collectibles over a short-term time horizon are seen as predictable. Now, over the long term, believe it or not, collectibles, antiques are actually quite unpredictable. For instance, certain markets are more unpredictable than others. Why do you think when you guys watch my videos and I tell you, be very careful with what's happening in vintage graded video games right now? Be very careful with what's happening in certain Magic the Gathering products. Be very careful what's happening in Pokemon cards. The reason being is the markets are too new. Any idiot out there can pretty much right now come into a speculative market, spend a little bit of money, and over the short term make money. It's the person, though, that has the understanding to come into that market, park a significant amount of money in that market for the long term, and make money. That is a key difference between a speculator and a sophisticated investor who's operating in these markets. There are main differences between the two. You know, if you go back, you look at all the videos I did on graded video games, I used to always warn you guys about Atari games, about graded Atari games and television games, ColecoVision games, and I told you guys there is a massive bubble in that side of the market. Well, today, few people question it because I was 100% correct, because I knew the supply of those particular items out there from companies like Best Electronics and other established retailers that were simply a Google search away, and you could pretty much order all those games that were selling in 9.4, 9.6, 9.8 WATA graded condition on Heritage for a fraction of the price. And as a result, a lot of people now are starting to get an understanding as to why a lot of these new and speculative markets are so risky. In the short term, they are predictable. Over the long term, when the trend is no longer your friend around the bend and it ends, that's when the truth comes out. And people realize that, oh, this market isn't what I thought it was. Now, when we look at Wall Street is the exact opposite, guys. Wall Street, over the short term, is unpredictable. For instance, I'm going to ask you guys a question. I am recording this video right now on Saturday, January 9th in the afternoon, believe it or not. We're not recording at 1 o'clock in the morning anymore right now. And I want to know what the closing price of the S&P 500 index fund is going to be on Monday, January 11th at 4 p.m. Eastern Standard Time when markets close. Can any of you let me know in the comment section below? Because if you can predict it perfectly, you should be an options trader, because you'll be a multimillionaire because you can see the future over the short term. Go on, what is that Reddit subthread? Wall Street Bets? And just read some of the threads. How interesting that is. I do not play the options. I am a buy and hold forever kind of guy. I like to hold mutual funds, index-based funds, ETFs, certain individual stocks, bonds, and the like in my portfolio. I do not like to buy and sell. I am not by no means a speculative trader. I consider that the kiss of death for most people coming into the financial markets. Why is that? Because over the short term, financial markets operate like a casino. They are completely unpredictable. Now, when we get to the long term, believe it or not, the financial markets are inherently different from collectibles. Again, the financial markets over the long term, believe it or not, guys, they're almost predictable. That's why I tell you guys, you want to have money? Put your money in an S&P 500 index fund. Put your money in a total stock market index fund and just keep plowing it in there and keeping it there for 10, 20, 30 years. I guarantee you, you will easily build a 6-digit, if not 7-digit net worth over that long-term time horizon. Why is that? Because if we look back in through history and we look at the aggregate average performance of the stock market over the long term, it has averaged 7% per year. That means whenever you hear the news media or certain investors get really scared and they go, oh my gosh, the market's going to drop 50%. Well, if you take the aggregate average over the long time horizon, the market has returned 7% overall. That includes 50% drops. That includes 40% gains. The average is 7%. So the key crux of this video, what I want you guys to understand is that when we compare investing in collectibles to that of investing in the financial markets, one of the key differences that people out there need to learn before they make key mistakes with their money is that in the short term, collectible prices are very predictable. In the long term, collectible prices are very unpredictable. And when we compare that to Wall Street, the inverse is true. Over the short term, Wall Street stocks, bonds, commodities, certain financial assets, they are very unpredictable. But over the long term, they are 100% predictable. And this is something that a speculator has yet to learn, that a sophisticated investor like me, like a lot of you guys that are educated in business, economics, and finance, this is what you already know. That's why the lesson of today is, if you are going to invest in antiques and collectibles, I'll tell you this up front, collectibles are a fantastic asset class to diversify into, but they should not be your core holding. Neither should gold, neither should silver, and neither should Bitcoin. That is the lesson for today. I hope you got something out of this. Let me know your comments. I would love to know your thoughts. Thank you for watching, and have a great afternoon.